All right, Aaron, welcome to the BlockHash podcast. And today is actually episode 200. Yay, I just realized that. So that's pretty cool. Glad to have you on. How you doing?
Good. How's it going, Brandon? Congratulations on the 200th episode.
Thank you. I appreciate it. I just realized that I should have done something more exciting in terms of an intro, and but oh well.
I was thinking how I do like the intro music. It's cool.
Yeah, I have a friend that makes me all the intro music. So I'm lucky I don't have to really go and pay to get that kind of stuff done. So he just kind of supplies me some good tunes, some good beats, and he gets some free promotion. So it's a good partnership there. Anyways, Aaron, again, thank you for coming on. Tell me a little bit more about yourself. Like, what's your story? How did you get into this space? How did you find yourself immersed in this crazy, amazing world of crypto and blockchain?
Sure. Well, thank you so much for having me. And I guess my background. So it was always our belief that Bitcoin was best regulated under the securities laws.
Mm-hmm.
If you look at the way beyond it, actually, Bitcoin's not a security. There's no question about that. But the way it's transacted and the way that investors speculate on it, in the sense that they expect some sort of return, and that's really the primary purpose in their participation. It would make sense that an asset like that is regulated under the securities laws. And their thought is that we wanted to create a system initially, and this is 2013. This is a long time ago. That where we were able to transact Bitcoin through an ATS, an alternative trading system in a brokerage
Mm-hmm.
account. And the idea was that you'd have investor protection, full and fair disclosure, fair and orderly markets, all the things that the securities laws provide. So that's how I initially got into the business, to try to quote unquote regulate Bitcoin, which is such an absurd thing to say. But essentially, we wrote a no action letter to the SEC, and I think this is April 2014. And myself and the law firm that actually incubated Prometheum, so where I was working at the time. And what ended up happening is that we submitted the no action letter to the SEC, and at the time they didn't really know or understand as much about Bitcoin, and they blockchain components were out there to them at the moment. And it makes sense because it was a totally new idea. They're a financial regulator. They're not necessarily technologists. Now they are much more. But so we sort of got bedbugged at the SEC, but then I really focused. I'm a securities attorney by trade, and I was in financial services before that. And I focused my practice on the application of distributed ledger technology to the securities industry and really the related regulatory issues. So from there, I participated in some of the early legal token framework conferences that were more academic, coming out of the big universities and stuff. And then when the DAO report, the DAO report came out in July 2017, which was really the first time that the SEC commented on the application of the securities laws to the digital asset universe. It wasn't called digital assets at the time. Let's say it was called tokens or whatever it was. The nomenclature becomes a little bit confusing over time. But when that came out, and it was really, which if you cut through the legalese, said that depending on the facts and circumstances, the securities laws apply to digital assets. And if you took it a step deeper, they basically said that most of these things are securities, and therefore there's going to be major applications of these frameworks, meaning the federal securities laws, the FINRA requirements, et cetera, to the industry. So that's when we started Prometheum. And the idea for Prometheum was to build a public market infrastructure, meaning a infrastructure where an asset could be issued on a blockchain, it could be traded, and then it could be settled and custodied properly under the federal securities laws. And the idea was to do it using on top of a blockchain and really integrating as much blockchain technology as possible. Now, just to be frank, that process isn't as quick as you would think. You're sort of boiling an ocean from some technological component. But in the meantime, we set about building our public market infrastructure. And sort of what needs to be distinguished here is that most people are familiar with the private share markets. The T0s, the securitized, the other people like that, they have those. That's only limited to accredited investors and institutions. I don't think that's what's necessary for the industry or sort of digital assets to go mainstream and allow for the participation of major institutions and just the general retail investing public. So we sort of set out to become the generation after that, which is a public market infrastructure. And my dates might be a little bit off, but we received approval from FINRA and the SEC, in the past 5, 6, 3, 4 months, whatever it is. And now the goal for us is to launch our system and basically allow the retail public to be able to be trading digital assets compliantly under the federal securities laws. And that obviously that's a major step forward. I think that'll be a major step because if you follow Chairman Gensler, and I'm sorry if this goes too much into regulatory stuff, but
No
Chairman
worries.
Gensler from the SEC has basically said that in his last big, interview, wherever it was, said that crypto exchanges should be registered under securities laws, that they're trading securities, and that basically, if you read through the lines, given that he's a very capable and focused man, I don't know if a reckoning's coming, but there's going to be a point in time when there's an official designation. And when that occurs, it's going to be difficult for the major crypto exchanges in the United States who aren't registered under securities laws or registered as money service bureaus with money transmitter licensure to be as active in the space and to have list as many assets. And we see ourselves as the future now, where things are going, in that we're first the public market infrastructure, and two, the compliant infrastructure where we're going to allow any and all digital assets that we're permitted to trade under the federal securities laws. And the plan is to launch Q1.
What do you think that future designation looks like when they do that for crypto? Because it could go a number of different ways.
Yeah, it's sort of one of those events that leads to a cascade of other events, that falls as a result of it. My thoughts on it have changed over time. I don't think, given that what's happened internationally, particularly in China, I don't think the United States is going to try to destroy the innovative complexities and universe and sort of the entire industry that's developed around digital assets, blockchain, everything related there. I think what there might be is you might see some sort of safe harbor period where they could try to become in compliance and sort of have some sort of grandfathering in some capacity. So, but I think the UK did something similar there, where that they said, okay, crypto exchanges, all of a sudden you're going to be regulated in order to maintain your business lines and whatever you're doing, you have to come in compliance with these standards. I think that might be one avenue. I think another avenue is that, and this has been more of my thought recently, is that it might be a situation where the major exchanges will have to partner with the ATSs, such that they have some sort of arrangement where they can give their clients access to it. Now, they'll still have to make changes. From my understanding, is that if you're on the major crypto exchange in the United States, you can't even get a statement. Like you can't get a statement. I'm not saying something that's such a high requirement that it's like such like an effete snob thought process. No, I can't even get a statement of what I've done in the past 30 days. Right. So like they're going to have to make changes there as well. But they're major institutions. They can affect change if they have to. But that's an alternative option, that they'll have some sort of grandfather, but then they'll partner with companies like Prometheum that will be able to actually offer these assets. Now, it's not, to be frank, it's not an easy process. Like there's so many parts involved in the trade life cycle. Whereas if you when you're doing it under federal securities laws, that you need to get everyone to go along. So, the custodians need to be on board. There's things like trade reporting, but no one knows about. Like, who cares about trade reporting? The trader doesn't care about trade reporting. But the technical components and the implications of trade reporting, or of 12G, which is a rule by which an illiquid security can gain liquidity after a certain part of a year, after a time period, and the implications of that, or whether someone's an affiliate or they're an insider. There's lots of different considerations here, but this is what's coming. It's not a matter of if, it's a matter of when now.
Yeah, it's going to be really interesting to see what happens. There's already this interagency like loggerheads that's going on too. The IRS has already said, depending on what gets put out in the infrastructure bill, that they might not even follow it because it doesn't make sense to them. And they're the one that have been hammering away at this stuff, trying to understand it for like 5 years now. So I don't know. It's going to be really interesting to see how that plays out, like how they designate things, how they classify things through legislation, and then whether or not other agencies are going to abide by it, because Some of the things, to be honest, what they've proposed don't make any sense at all.
You mean the definition of a broker?
Some of that, yeah.
Yeah. Any transaction over $10,000, the people who are responsible for essentially AML KYC on both sides, like
Yeah, stuff like that. Doesn't make total sense, but I mean, we'll see.
But again, look at just one point here. Like, historically, if you look at the history of like societies in general, the regulation of money is like one of the main things governments do, right? So I'm listening to my History of Rome podcast, which is fantastic, and they're talking about how the denarii used to be 80% silver. And then slowly over time, the emperor would reduce it in order to cover, the budgetary outflows, basically, inflows versus outflows, you're spending more than you're getting in, right? But they're still controlling it. Like, I think this was I don't know if it's an anomaly or a unique period of time, but like the regulation of money, whether it's, and the line of money is blurring. It's not just traditional money now. Now it's money with a use case, right? So like what is a utility token? It has some sort of fungible value, plus there's a utility to it, right? That sort of needs to be, I think that continues to need to be regulated. And I think that people who have the mentality, like historically you heard innovation kills regulation. I mean, excuse me, regulation kills innovation, which I think that people like just because it flows off your tongue, right? Like, so, but in order for the industry to go mainstream as a whole, whether it be on the stablecoin side, whether it be on the digital asset side, whether it be on the any component of the industry, right? These are going to have to be regulated financial services, and that's sort of what our thesis has always been.
Yeah, I don't have any issue with there being some sort of regulation. I know that kind of scares people and it gets bad press, but when you have correct regulation, you have at least a little bit of it, then that gives people an idea of how they can play. It takes off the stress of doing something wrong and getting in trouble, and you're like, okay, I know what the bounds are. I know what I can do and how far I can go, and what the rules are for the game, essentially. What I don't like is when they make really uneducated ideas or accusations, or say things like Bitcoin should be listed as a commodity. Like, it doesn't make sense to lump everything together and say, okay, corn, wheat, barley, Bitcoin, cedar, like which one doesn't belong here? Like, it doesn't, some things just don't make sense. Or
I'd like to point out, though, in the commodities universe, they're not physicals. Like if you actually called in all the commodity contracts against the physicals, it wouldn't work.
Right.
So they see it as just a contract. But I agree with you. It doesn't fit into that mode. I think what you have here is sort of, and I've been noticing it more and more, is that part of the issue that I think there is with government is that, particularly in America, is our government are ran by octogenarians. And no disrespect, like honestly, the wisdom is there, but like, it's very hard. I'm 37, when I'm 47, 57, I think it's going to be hard for me to focus enough specifically, unless I'm doing this specifically, to be able to contend. I hope I am, but like to be able to particularly regulate in an intelligible fashion. And I think that the other thing that you're looking, and this is we sort of like grazed upon this before, is that in the beginning, particularly under the previous SEC, it was sort of like the Wild West in some capacity, and that just don't go too far over the line and we'll look the other way. I mean, you've seen it in the United States across the board with a lot of laws. Like what happens with the marijuana laws? Just make it legal if you're going to be able to regulate it as an industry. Why do we have to pretend in this this pseudo legality? Like, one of the issues I think you're seeing in general is that laws have become stale, and instead of getting rid of them and replacing them with others, they're just trying to look the other way. And I think that this is an opportunity to end that trend. So like actively and intelligently regulate this industry, particularly with the gift that China gave us. Like, China was one of the first countries that was very pro blockchain. Obviously, it's centralized in the capacity, in the sense that they're saying it from a mandate from above, but they understood the benefits of it. And now that they've sort of said that's a no-go, it creates a great opportunity for America, if they're going to be able to regulate it properly, to invite entrepreneurs and have the innovation occur here.
Right. China knows exactly what they're doing. They
Hmm.
want a firm grip over that industry within China. So yeah, you see all these bans and everything and whatnot they do like every year or 2 years on Bitcoin. But I mean, in the end, they're heavily promoting and allowing innovation for blockchain within certain bounds, and they just want a centralized, governing body to control it, and they want to make money off of it. They want to integrate it with their system. If they didn't believe in it, they wouldn't be creating a CBDC or wouldn't have
And
created a
they made all the
CBDC.
money in the beginning.
Yep.
They're the
Yep.
ones
That's
who
just
were
how they
like
roll.
50+% of the mining was there, like all the validation, like, and who could criticize? You can criticize. That's what a proactive
Hmm.
government should do. But yeah, no, I get it. No, I get it.
Yeah, totally. Tell me more about Prometheum, though. Like, what's this? What's your guys' goal? Like, what are you guys trying to accomplish with Prometheum overall? What types of products and services are you putting out there? Give me a bit of a rundown.
Sure. So the goal initially was just to create a public market infrastructure where anyone could trade digital assets, right?
Hmm.
And like, this is not a perfect example. So sometimes, it's not perfect, but NASDAQ on a blockchain,
Sure.
right? Like that was initially. But once you get into the molecular level, so first our goal was to become a public market ATS. And just so you understand, like a public market infrastructure that has pre and post trade risk management, the admins, everything that goes into that, it's almost light years ahead of a private share market. It's a totally different beast. It's apples and oranges. Beyond that, now that we have the ATS and the goal is to go live in Q1, the next focus is the special purpose broker dealer, which is the equivalent of the clearing and custody side in the digital asset universe. So, and this is to the furthest of my belief, and I'm pretty sure about this, Prometheum's the first public market ATS in the United States. Yeah, you can look at all the others. It's a difference, right? But now that we have that in place and we'll go live, the next thing is, I think, to become one of the first, if not the first, special purpose broker dealer. Because a special purpose broker dealer, what is the main business that ties into that? It's the ATS. The ATS has to have the relationship with the custodian, right?
Hmm.
So I would say that's the next big step for us, and that was sort of our goal all along. At the time when we started, so we started in September 2017. There was no special purpose broker dealer release. I believe the release comes out in Christmas of 2020, maybe something
Hmm.
like that, right? But like, so we've been focusing our efforts to basically create the frameworks that are required there, because it's not like there's a model that exists out there. And it's not like you could say, okay, we'll take a clearing firm and then we'll figure it out. That's not how it works. This is a totally different infrastructure. And not just that, a clearing firm, if you read the release, is not allowed to actually custody digital assets. It's sort of a bifurcation between the special purpose broker dealer and the rest of the clearing firms. So once you become the special purpose broker dealer, and you have the ATS, then you've really created the securities house infrastructure that you've been going for all along, because you can create a digital asset, you can list a digital asset, you could settle, and you can custody it.
Got it. So you guys are aiming to go live in Q1 of 2022, correct?
Mm-hmm.
Got it. When you say an alternative trading system in ATS, what does that mean exactly? Are you talking about trading system for just cryptocurrencies? Are you talking about a tokenized security, or what does that encompass?
So that's a good question. So in my mind, there's one or two cryptos, like
Hmm.
true cryptos. You have Bitcoin, and then after that, maybe you have Ethereum, which has some sort of, confusion based on the comments coming from the powers that be, that maybe it's a security, maybe it's not.
Hmm.
Right? If you listen to the most recent comments from the chairman, my impression is that his impression is that it's a security. Not saying it matters, but that's where it comes. So assume not Bitcoin, right? Because when you deal with large institutions now and they say, oh, we're integrating crypto, it means they want to give their clients the ability to trade Bitcoin. I'm
Hmm.
talking about the digital asset universe, the entire utility token universe, everything after Bitcoin, everything that's a smart contract enabled network. Now, again, our whole mentality has been this crawl, walk, run approach. So we've always tried to work with the regulators across the board to make sure that that everyone's comfortable with what's going on. And I think that given what I mentioned before about the chairman's comments that a lot of securities are trading on crypto exchanges, I think they provide those specific, classification or those grouping of assets, which is a lot of assets. It's not a few, right? Those provide a good source of potential listable assets on our ATS.
Got it. What's that going to look like? When you guys launch in Q1, are you going to have like a bunch of stuff people can, start investing in right away? Or is this going to be like a slowly brought out like launch, or what's the plan?
I think the goal is to launch with three tokens.
Okay.
And then add thereafter. What you're trying to do here is you're doing twofold. You're launching, so the goal is, you're focused on revenues and everything like that, but you're also proving out your system. This doesn't exist right now. There's no alternative trading system that is trading the digital assets that we're looking forward to trading. And so and I think what you'll see then is you'll start to see a crossover in that you'll have assets that are potentially listed on a crypto exchange and they're also listed on our platform. But on our platform, you're protected by the federal securities laws, which means that like you can get a statement. That's a minimal thing on the federal securities laws, but you can get a statement. You could basically, if you call up and you have a complaint about your account, someone has to pick up the phone. Everyone's heard the horror stories of that essentially you call up, your account's frozen, the market's moving, your account's frozen on a crypto exchange, and it takes a month to unlock.
Sure.
That doesn't work in a brokerage account. You have regulations against that. You can't. I think what you're seeing in that universe is that historically you have that like Facebook model. Who cares? We have enough users. Why does the individual matter? Right? But that's not how it's going to work once this is regulated under federal securities laws. When people have actual complaints, there's arbitration that they could file. There's basically not just that. You have the investor protection that we spoke about in that capacity. You have full and fair disclosure, meaning like all the information that has to be disclosed, that can be disclosed, has to be disclosed, has to be disseminated publicly, right? That's a little bit harder when it comes from, how does it work with the utility token that isn't necessarily a reporting company but not just that. The third thing is you have fair and orderly markets. Fair and orderly markets means that like you're getting best price execution. I don't think that's happening on crypto exchanges. You're not seeing that. It's not like you see the book. It just doesn't work like that. And particularly if you have like a set order where it's like, oh, I'll buy $100 a day of this asset. You really think that you're getting best execution? Like I don't want to say too,
Sure.
but you're not. And so what I think you'll see is that there might even be a situation where you have premiums for assets listed on our platform because you have these protections,
Right.
versus the price on if it's listed on a crypto exchange. And I don't think that what we're saying is so revolutionary. It's just a natural evolution in how the space is going to go. Regulations here, it's being implemented. People need to be protected. Like before, when we spoke about innovation and regulation, we talked about it more on the creator side, on the entrepreneur side. Like, oh, I hope that the regulatory frameworks that they put in place don't hinder what we're trying to do. Don't make it so difficult. Don't make our lives so hard. But what about on the other side? What about on the investor side? The guy who put, his life savings into something, all of a sudden it disappears. There should be recourse. Like there has to be that. But you need to. The reason that these rules were created in the first place is because people were getting screwed, and like charlatans were able to walk away with the money. Like it should be that way. And we don't need to revert back to a way where people had to worry whether their bank is going to be secure, or whether if their bank has a run because they're making bad loans, all of a sudden they've lost their savings.
Sure, that's a good point.
So like that's why I think that this has to happen, because if you want this true mass adoption, if you want the average person to be able to use stable coins as a means of payment and whatever else you want, right? Or you want the average person to participate in digital assets. Or you want people just to learn more about the blockchain space and how this evolution at Web 3.0 and everything else is going. It needs to have these protections attended to it.
Does that create limits on what you guys could list though? Like, are you guys going to be unable to list like Doge or Shiba coin or a privacy coin or something along those lines? Like, is there like a bounds that you'll have to play in?
I think the way I would look at it is the dog tokens are not our main market.
Sure.
I understand where that's coming from, and I understand, you want to participate in the space, live and let die, right? But
Hmm.
but at the same time, there's a lot of legitimate tokens and a lot of legitimate companies. You have companies, and I'm just giving examples, high-level examples
Hmm.
here. You have Polkadot, you have Filecoin, you have Solana, you have a bunch of real tokens and real ecosystems that are really trying to, you
Hmm.
know, create something that's going to change how data is managed and how people interact with data and all these other things that are really important. And
Hmm.
I think that if you look at those examples, there's potentially 100+ assets you could list.
What about privacy coins? Things like Horizon, for example, or there's some really good projects doing really cool things, but they are very privacy oriented, have more anonymity attached to them. Are those things that could present an issue as well? Because I know regulators don't like those either.
Yeah, listen, again, one of the things that I was mentioning before um, with Rule 144 and
Hmm.
the sort of the avenues you're going to have to go through to be able to list these tokens is one of the things is you're going to have to know who has what.
Hmm.
If I can't tell where it came from, how do I know it didn't go through a mixer and it's some sort of laundered token? Should I can't speak definitively, but it makes it hard. And
Sure.
one one of the things, again, like we've worked so hard over years to try to really make sure that we're in line with the way regulators are thinking and the way the industry's going. Those tokens at the current moment might present a risk that's not manageable.
True. True. It's got to be kind of difficult to navigate some of those waters. I can't even imagine, but at the same time, it's got to be exciting because you're also part of this like evolutionary way of getting people to invest in this stuff more safely and more legitimately. Where can people go to keep up with everything you guys are doing with Prometheum in terms of preparing to really launch in Q1? Is there a blog? Is there a Discord? Is there a newsletter? Where can people go to get educated?
Yeah, just for now, the website mainly. As we move close to launch, we'll be sending out more information. So there's a mailing list you can sign up for, and I think that uh, this is going to be a big thing, even though it won't seem like a big thing.
Hmm.
And that when it happens, you'll have the first time where digital assets are actually trading on a publicly on a registered public infrastructure for that allows the retail trading public to participate. Like one thing we
Hmm.
really haven't mentioned is that depending on the reports you read, there's trillions of dollars. I saw one number as high as $100 trillion, which that's absurd in my mind, waiting on the sidelines to be able to participate. It's
Hmm.
very hard for what I would call a securities house, which is like a European term, but let's say a securities regulated institution to integrate with a crypto exchange. But it's not difficult for a securities regulated institution to integrate with another securities house like Prometheum.
Hmm.
And the way we've built our system is basically meant to allow traditional Wall Street, the legacy systems to integrate and to allow their clients the ability to trade digital assets through their existing accounts. And the idea there is to integrate it such that it's seamless and people can, through their existing Schwab account or whatever the like, can then trade whatever digital assets they want. And I think that's how you sort of breach that potential trillions of dollars of pent up capital that's trying to participate in the space.
Got it. I think this is a pretty good place to wrap up. A lot of info covered, and I need to go take my dog for a walk and burn her energy. So, Aaron, thank you for taking the time to come on the show. Really appreciate it. Would love to have you on again in the future as well. After you guys go live at some point, I think that'd be pretty cool. So we'll stay in touch.
Awesome, Brandon. Congratulations on the 200th episode, man.
Thank you. Appreciate it. Appreciate it.
Yeah.
All right, man. See you soon.